And if you have been with us since the beginning of the week, you would know that we have been quite profitable on the US oil, as we have been buying this commodity since the beginning of the week. And in fact, we were lucky enough to scoop over 800 pips in profit on all of our positions at the beginning of the week. And what makes this very interesting is the fact that we made all this right on that same day, on Monday, as we saw our price action did a final breakout of that channel that we identified just right within the $69.80 level and the $69.10 area. And you all know what we look out for whenever we have this kind of beautiful channel. We want to see price either do a breakdown of structure or a breakout of that structure for a trading opportunity. And with our buy stop order sitting above the $69.80 level here, we finally saw our first buy position for the week triggered at this point. And if you recall vividly, we had able to ahead of time identify structures like the $70.20 level, where we were looking forward to more opportunities to add more position to our existing trade. And as you can see here, right on Monday, a couple of hours into the New York session, we saw price action break out of that structure to trigger the second position. And we also had another structure at the $71 level, which triggered the third position on this one. And we rolled the move all the way up into the $73 level, where our TP target was rightly situated at this point. And since price action hit our TP target on Monday here, we have seen a situation in this market where price action appeared to have been caught within a consolidation phase just right within the $74.35 level and the $72.50 area in the last 48 to 72 hours now. And this more or less a sign that there is a consolidation phase in this market where participants are probably looking forward to a catalyst that will be bringing some liquidity into this market. And since we are looking forward to the GDP today, it quite makes a whole lot of sense while we have been witnessing this consolidation phase here. However, on Tuesday we had some buy positions too. On Tuesday we took advantage of some buy opportunity at the $73 level. We also had some opportunities here at the $73.50 area before the breakdown of the structure happened during the course of yesterday's trading session. And remember what I told you during the live session yesterday, where we were able to identify this bullish trend line here, which has been guiding the bullish momentum for I think 24 hours at that particular point in time. And we said we shall be using this trend line yesterday as a guide for our trading activity. And one thing we agreed on here is that if price action continues to trade above that bullish trend line, definitely we want to feel comfortable in our buy position, and at the same time look out for more opportunities to add more position to our existing trade. But if price action breaks down that trend line, then definitely we will have no choice than to look out for selling opportunity. And look at what happened here during the live session yesterday. During the New York session, I think 3 to 4 hours into the New York session, we finally saw the breakdown of that bullish trend line, which also shares a confluence with that $73.50 level. And with a sell stop order situated right below the $73.50 level, we had a sell position triggered yesterday. And I hope you are part of this move as price action moved significantly, and with about 85-90 pips thereabout, we had a profitable position at that point. And I hope you moved your stop loss accordingly to secure the current position just right before the buy pressure resumed in this market. And if you recall vividly what I told you about this current structure around the $72.50 level yesterday, I told us all that if price action ever breaks down that key level, that key trend line we had here during the New York session yesterday, that we shall be looking forward to this bust up around the $72.50 level, which also shares a confluence with this bullish trend line that has been supporting this bullish momentum since the beginning of the week, to see how price action will be reacting to that level to now determine if we are going to be adding more sell position to our existing trade, or we shall be getting ready to buy the US oil. And you can see what happened as soon as price got into that bus stop. We begin to see some buy pressure resume around that area, giving us a clue that we might be in for another second wave of the trend continuation to the upside. And looking at the structure here, it appears price is one more time respecting that bullish trend line that has been supporting this bullish momentum since the beginning of the week, to further emphasize the strength of the sellers at this particular point in time. And with the situation here, you must have been taken out of your sell position at some small profit there, or at worst case scenario break even if you had moved your stop loss to your entry point. And with the situation here, seeing what was happening here during the early hours of today, what I actually did here was to identify a platform upon which I will be able to take advantage of a buy position in this market. And for those who are actually taking advantage of the buy position right around this area, well, kudos to you for being on standby to have caught that move, as you will currently be running with about 9,900 pips in profit at this point. For me personally, I missed out on this move, and the reason why I missed out was simply because this all trading activity here happened during the middle of the night and I was fast asleep then, so I actually missed out on that opportunity. But when I woke up this morning, this was what I was able to identify here, a platform right around the $73.20 level, which will definitely be one of the key structures we shall be using today to guide our trading activity. And for those who had bought around this area, well done to you guys for being on that standby to take advantage of that move, as that was the area where I was able to join this move this morning. So what we are going to be doing right now today is to see how we are going to be using the structures to guide our trading activity today. And for those who had missed out on this buy position here, we shall be looking out for opportunities where we could take part in this potential move to the upside. So with the current situation we have here, the first thing I would like us to do at this point is to scale up into a much more higher time frame. Let's see things from an holistic point of view before we come back down into the lower time frame to make a decision for today. So scaling up a little bit into the higher time frame here, so I will be going on into the daily time frame so that we can take a quick look of what we saw at the beginning of the week and how we decided to buy the US oil. So this is the daily time frame here, and let me zoom into the current structure so that we can see things more clearly. So this is the situation we have here. And it is quite obvious that price action has been bearish since the second half of last year. And to further emphasize the strength of the sellers at this particular point in time, we have connected the series of lower highs, which gave us this bearish trend line. But that is not the most important structure here. But what we want to be focusing right now is just is what has been happening here in the last 4 to 5 months, where price action was initially trapped within a channel here between the $82 area and the $70 level. And since the beginning of this month, which was what we focused on at the beginning of the week, we saw this impulsive bearish move to the downside, which emphasized the strength of the sellers for this month. And one thing I laid emphasis on during the beginning of the week was the fact that this impulse leg actually broke down two key structures in this particular market. Now, the first structure here is this bullish trend line, which was broken a couple of weeks ago. As you can see here, we had this bullish trend line which was supporting a higher low in this market, and it was finally broken here during the second week of this month. And then we saw price action drop into the downside, breaking another key level at the $70 area. And if you remember vividly, I made mention that the $70 level has been the lowest point price action has ever been since December 2021. And with the breakdown of that structure, of course, we expect that if price action breaks down key structure like this, we expect that one point in time price is likely going to be coming back to retest the structure to incite another wave to the downside. Now, with the situation here, price did not respect the $70 level, so we were looking forward to our TP target for this buy position to end at an area just right around the bullish trend line, where we shall be expecting a retest of that structure there to incite another wave of bearish momentum to the downside. But with the way things are looking right now, we need to be very, very patient, as there's still a possibility that price could break above the bullish trend line to incite another wave of bullish momentum to the upside. And from the fundamental perspective, I also made mention that we are also looking forward to the OPEC Plus meeting, which is going to be coming up on the 1st of April this month, next month. And this is more or less another event too, from the fundamental perspective, that majority in this market will be looking forward to as well. So we don't know what the decision is going to be like. We don't know what they're going to be talking about, but definitely they will want to be doing a policy that will be bringing back the oil price to the upside, and this might likely be a cut in oil production. We never can tell, but whatever happens will determine what our next line of action will be. But at this particular point in time, you would agree with me that we are at a critical level right here, as price action appeared to have tested the $74.25 level. So we are within the area around the $75 level, where we want to see how price action will be reacting to the structure to decide if we are going to be getting ready for the second wave of that bearish momentum to the downside. And if we do have a reversal pattern here, a trend continuation pattern here on our lower time frame, then a breakout of structure will be welcoming a trend continuation to the upside. So these are the things we shall be looking at on a much more lower time frame. So what we are going to be doing right now is to scale back down into the 1 hour time frame, where we want to see how price action has been reacting to that area between the $72.78 level and the $74.20 level, which is a consolidation phase happening here in the last 3 days to decide what our next line of action will be. So we have the $74.30 and the $72.70 area to look out for on the 1 hour time frame. So let's scale back down into the 1 hour time frame to see this channel, and let's use it as a yardstick for trading activity for today. So I would like to make this chart a little bit cleaner. So we are going to be cutting out structures that we no longer need at this point, so that we can make things a little bit cleaner. So for today, I told us all we are going to be using the $73.20 level as a yardstick. So this is the consolidation phase we identified on the daily time frame. As you can see here, it's quite choppy, and it could turn out to be a trend continuation pattern, and at the same time it could turn out to be a reversal pattern. And if we zoom out to see what has been happening here since the beginning of the week, you would agree that a retracement is long overdue at this point, as those who took advantage of the bullish momentum right around the $69.10 level will at one point want to be doing some profit taking activity, which might lead into a retracement back into probably our golden zone area in anticipation of another wave of bullish momentum. So these are things we want to see here and want to identify around this area. So the first thing I will do here is to first of all delete this one, and then I would want to, I think I will have to keep the $73.90 level because it's a key structure for this week too as well. And we have the resistance line here, so I think we still have to keep some of these structures here. So I will just have to extend this bullish trend line, which has been supporting this bullish momentum since the beginning of this week. I'll have to keep it there and make it a little bit thicker so that it emphasizes its significance with this current market structure. And we have seen how price has respected that trend line here. So I'm of the opinion that price might be going to the upside. So I told you I have a buy position around this area. So we are looking forward to another breakout retest of the $73.90 level to add more buy position. Then a further breakout of the $74.35 level will be that straw that will break that camel's back around that area to give us a very, very strong bullish momentum to the upside. So one thing for sure here is, if price ever breaks out of the $74.35 level, we are going to be looking forward to a massive move to the upside. So that is how we are going to be buying here. So the platform for our buying momentum here is at the $73.20 level and the bullish trend line. So this is what we shall be using to guide our trading activity for today. So as long as price remain above the trend line and the $73.20 level, we feel comfortable in this buy position that we are in right now. So like you all know what we do here, even in as much as we are looking out for more buy positions in this market, we should also take into consideration the potentials of the sellers in this particular market. And if we consider the impulsive move that we saw here during the New York session yesterday, this bearish impulse leg, it's more or less a sign that sellers are very strong in this particular area where we need a breakout of the structure to confirm the strength of the buyers. And if we take this into consideration and zoom things a little bit further out, you will notice how price action appear to be transitioning into something that looks more like a reversal pattern in the form of a head and shoulder pattern. So we have the left shoulder, we have the head, and we have the right shoulder here, which appear to still fall within the range of the left shoulder, I guess, and we might likely see the $72.50 level serving as the neckline of this reversal pattern. So if we are going to be selling the US oil for today, well, I would likely want to see price action break down the $72.50 level for that selling opportunity. And if you look into the past here, look at what has been happening here since Tuesday's trading session, you will see how the $72.50 level has been a strong buy niche in this market, rejecting all attempt by the sellers to break down of that structure. So if this is going to continue, then definitely we are looking out for buying opportunity. But if price action takes out all the buy positions here, then with a breakdown of structure, then we'll have no choice than to look out for more opportunities to sell the US oil for this week. So for today right now, we are bullish on the US oil, but if price action ever breaks down the $72.50 level, we'll definitely want to be thinking of selling the US oil for today. So that is my view here on the US oil. If you have any questions, feel free to drop your inquiries in the comment section.